Hello, everyone. Welcome to a brand new episode of One Vision, the Fintech Views. This is Theo, your host for today's episode. Joining us today are three old friends from, I don't know how many years it's been, but is however long I've been in Fintech. We are getting back together, Pam, Tiffani, and Julie. We are going to be doing a look back of the year that is 2025 and doing our best possible prediction crystal ball moments of 2026. Welcome, ladies. Thanks for joining us again on the show.
Hi.
Yeah, happy to be here.
Hello. And Pam, welcome back with your new role with Alloy Labs, and official congratulations from all of us.
Thank you.
Yes, congratulations and happy belated birthday.
And happy belated birthday. Yay. Two good things going in one shot. All right. 2025. If I were to sum it up with one word, I think is unpredictable is a good word to say it. I might be the only oddball that if you were to ask me back in January 2025, if I would see some of the happenings that's going on the last quarter of 2025, I would be like, no. I didn't see the speed that the stablecoin and the Genius Act was going to take hold. That took me a little bit by surprise. Back in earlier this year, we were thinking about generative AI. We're thinking about some of the Gen AI bots. I didn't think that we would be talking about agentic commerce towards the end of the year. So lots to unpack. For the show, let's start with where are we with consumers? After all, that's what we are here for. We want to do what we can, provide solutions to work with banks and fintechs to help with consumers and help them with better outcomes. I don't know if we've gotten there. To be honest, there is so much uncertainty that's been happening with our nation this year. Cost of living, uncertainty in policy, SNAP benefits, healthcare benefits, subsidies. Do we have it? Do we not have it? Mass layoffs. I lost count of how many companies have laid off more than 10,000 people this year. Public sector, private sector. Lots of flashing warning signs. What do you think, Julie? Let's start with you.
What you mean about the warning signs?
Yeah.
Or what? Okay. Yeah, I mean, so we have seen a little bit of cooling when it comes to fintech funding and an increase in M&A activity across the board. Lots of consolidation there in firms. So that's certainly one signal there.
Pam, what do you think from a money perspective, funding?
Yeah, I think, it's only bound to happen when people are not really excited about putting money into alternative assets from the LP perspective. VCs only have so much cash to deploy. And then when they're not able to do that, just the consolidation of what we can even invest in becomes so much more scrutinized of like, this has to be a winner. And we don't have, like 2021 money to just throw millions and billions. I think we've seen a lot of the money going towards AI companies, and that's our current bubble that is definitely going to pop soon. So I think that detracts away from just the fintech space in general, because I think we've kind of all just lumped it under AI. So I'm sure that's adding into just like the statistics and numbers around that. But I think just the economic outlook is not great. So that, of course, just everything money related, we're all just kind of pulling back on, whether it's, venture investing, personal investing, spending money, period. So I think there's just a indication of where we're all at right now, mindset wise.
Yeah, and I think the other thing that adds to the pressure is some of the products that's making a comeback, or some of the newer products, Tiffani, that we were talking about earlier, a 50-year mortgage.
50-year mortgage, reverse mortgages. Yeah, I mean, if we start to think about just life in general, I would say the cost of everything is naturally going up, right? From your ability to buy a home, to buying a car, to insuring that car and that home, to buying your groceries. The cost of everything seems to be trending upward. And part of that is driven just by the economy, but also that part of it is driven by, if I think about insurance, the risk, right, in certain markets. And then the cost to replace property is also going up. So it's going to be an interesting year for sure.
Interesting is a good way to put it, my friend.
Can I tap into tap into the reverse mortgage piece a little bit? I mean, I feel like that's such a strong indicator of just where retirement funds are, and gives me a little bit of anxiety of like, should I keep putting money into this if like we're at a state in the country where retirees are feeling like they need to do reverse mortgages and take equity out? Like I feel like that's such a huge indicator of consumer hardship right now, where people that should be retired and have no worries in the world, theoretically, living off their retirement, have to then go in and pull equity out of something that they've hopefully had already paid off, 15, 20 years ago. And I think also just going back to this whole like conversation that we've all had in the last couple of years about like the great wealth transfer, if we are then doing reverse mortgages on like our parents or grandparents' homes, like where there's no great wealth transfer anymore. The equity has already gone out of the home. So it's just like are we still talking about the great wealth transfer? Because if we're doing reverse mortgages, there is no great wealth transfer.
That's a very good point. I remember, a decade ago when I was in a previous life, one of my commentary at that time was, if we don't take care of people's finances as we get older, we don't have to worry about wealth transfer because there's nothing to transfer. Mm-hmm. And I think that remains true. That being said, I think we are seeing a bigger split in terms of the top tier, the have, and then the rest of the country, the have-nots. So for those at the very top, we continue to see spending. I think, more than half of the country's spending is being done by those who are the most well off, whereas the rest of the country, those who are doing reverse mortgages, who can't afford to pay for their health care, and that's why they have to do that to get their $1,000 to pay for health care. Those are the ones that probably really didn't have a chance to begin with wealth transfer. So there are those challenges as well. Now, I do want to give a shout out to our friends at Propel, the team, because earlier in the month when we had a lot of challenges with SNAP recipients not being able to get money in their banks, they were one of the first ones who came out and say, look, we're going to put an emergency relief fund together and we are going to give money to those who need, no question asked. Mm-hmm. And, they've done an amazing job at, trying to make life easier for those who can't afford to put money in groceries, to those who have only $1 left in their bank account. I'm not going to the semantics of why we have that situation in the wealthiest country in the world, but here we are. So thank you guys for doing what you do. I hope we'll be in a better place in 2026. That will be my wish list. Moving on, related to consumer financial well-being, payments and wallets. Julie, what's Walmart up to?
Yeah, so Walmart recently, I think it was September, they partnered with ChatGPT to essentially embed payments into ChatGPT. And I've actually used it because and I didn't do it on purpose. I meant to do it on purpose. And then I was casually searching for something and I was asking ChatGPT about something for my kid. And it was like, well, here's what I recommend. I clicked on it and it brought up the Walmart homepage. I was able to do everything within ChatGPT's app.
Oh, wow.
And so they've embedded payments into there. And there have been a couple of statistics out. Consumer behavior is shifting in that direction. I'm not the only one who's shopping using ChatGPT or other LLMs. So let's see, 38%. So according to a report from Adobe, 38% of consumers, they've used generative AI at some point during their shopping process, and another 52% plan to. And obviously this is going to be huge because we have a huge or very significant shopping season coming up. And so there's kind of a land grab right now within LLMs, and specifically when it comes to agentic payments and agentic commerce. Everybody's trying to be the first. So we've seen 3 major companies launch rails for agentic commerce. The first was announced by Stripe in collaboration with OpenAI. That's the Agentic Commerce Protocol, ACP. Google launched their own Agentic Payments Protocol, AP2. And then Visa launched a trusted agent protocol. And all of this happened, like all these announcements happened within like 3 weeks of each other. It was really interesting. So everybody's moving really fast in this area because they see the potential revenue as consumer behavior shifts from traditional e-commerce into, shopping via ChatGPT, which for me is preferable, because I don't get ads. It's not really trying to sell me on anything yet. Though it will be interesting to see, if OpenAI will allow ChatGPT to like insert bias in and things like that. But right now, it's just a pure experience for me. Have you guys used any ChatGPT or anything for shopping?
I'm so fascinated by this and just like the security and privacy around this. I am like, how does this all work? Like, I don't know if you've looked into it at all, Julie, but I would be concerned of where my information is going, who's going to be housing this. Is OpenAI going to start selling me stuff? Is it going to start giving me ChatGPT responses that are specifically related to things that I've bought and like trying to categorize me as a person based off my spending habits? And I'm just like, I'm very curious of how that all is going to work out.
So for part of that, and another thing I wanted to talk about when it comes to trends for 2026, is in the past 3 weeks, I've seen a lot of KYA tools. So we hear a lot about KYC, which is obviously regulated, mandated, and then KYB, know your business. So know your customer, know your business. And now we're looking at KYA, know your agent. And I think I saw 2 companies, not last week, but the week before, launched agent authentication tools, which are essentially bringing identities on chain, knowing the agent, and then also knowing the customer, and then knowing that the customer is, or the agent is represented by the customer. So there are like 3 like major things, and it's probably more complicated than that, but those are like the 3 major pillars of KYA. And so solutions are out there. I don't know, who their clients are, if people are using it. But I would agree with you, Pam, that yes, we're probably severely behind when it comes to authentication and the security and privacy of it all. So we're definitely putting the cart before the horse when it comes to agentic commerce.
So, and there's also the question as well, right? When we talk about being able to identify something as a bot that represented the customer, when it comes to, should they? Answer is probably yes. But then if you think deeper, as in the lawsuit between Amazon and Perplexity, if Amazon knows this is a bot that is representing the consumer, do they have the right to block the bot? Because they also have their own bot. So that was the question that is hanging out. Or the other, option would be, would they give unfavorable treatment to those particular bots because they want consumers to use theirs? And that's where the whole bias question comes in. What are they allowed to do and what are they not allowed to do? Especially with regards to the land grab, Julie, that you were talking about that's coming in.
So that was my question when I saw that Amazon issued that cease and desist to Perplexity because of the bots, and it's against their terms and services or terms and conditions to have bots shopping, regardless of whether or not it's on behalf of a real consumer. And I was like, there has to be an ulterior motive here. Like, is Amazon, like, they have to be working on their own shopping bots and they don't want Perplexity involved because they want consumers to go directly to Amazon versus Perplexity. So, I think that's the end of it, the end line there. And it's not necessarily that it's against their terms and conditions. And, but that, I think we'll only see more of that in 2026 and beyond, because there really are no guardrails. There are no lines. And battle lines are being drawn like as we speak, and that'll continue to increase in 2026.
Pam said something really important earlier that I think people are overlooking from a payment and a banking perspective. If you have generative AI tools that are controlling the product discovery and recommendation, you lose all the data associated with that, right? If you are a bank brand. And so even if you think about banking, which I think there's definitely not a lot of dialogue about what Gen AI means for banking in terms of product discovery and consideration. I'm in the middle of writing our banking trends to watch in 2026. And one of the things that we said is that that generative engine optimization is really going to start to test bank strategies. So there are just today 10 digital banks that control more than 83% of visibility across ChatGPT, Perplexity, and Gemini. And that's according to Avenue Z's 2025 Fintech Digital Bank AI Visibility Index. So all of these brands are basically, there's 10 brands that are getting the most attention when consumers search for things like best mobile bank or no banking fees. So banks are going to have to start putting in the work to figure out what their experience is in all of these generative AI tools where customers are going to begin to go ask and research banking products.
Yeah, that's a really good point. Yeah.
I'm also curious, Julie, I don't know if you had a chance to see this, but how do those transactions that go through OpenAI look on like your bank statement? Does it show still like
yeah,
Walmart
it still shows as
was
Walmart.
the merchant?
Yeah. The MCC
Does
code
it show any indicator that it used like a agent to do this?
No.
I feel like
and I looked into this a little bit because I was like, what is that? How is this payment broken down in the back end? And right now, like nothing is disclosed, but right now it does look like OpenAI or ChatGPT is not taking a cut of those transactions. Like it's all just referral fee. And I read something yesterday, and I don't know if it's true, so I don't even know if I should say it. But it said 20% of all Walmart's referral traffic comes from ChatGPT right now. So I don't know if that's true, but I was like, man, that is mind blowing. I don't know.
10%?
20%. Yeah.
Oh, 20%.
20% of all referral traffic. Yeah.
What are the ethics here, guys? Again, I know Theo loves my favorite word, ethics. At what point is ChatGPT then taking like higher referral fees from certain partners and then directing traffic that way? And then even on the Amazon piece, them not allowing other bots in, like at what point will other commerce companies start charging specific bots that are coming from specific locations more than they're charging like their own internal shopping bots? And is that ethical?
Yeah. So that number is in alignment with the number that you just talked about, Julie. So we have a U.S. Consumer Banking Habits Survey that we do every year. And this year we asked consumers where they research banking products and services. And 20% of respondents indicated that they used AI tools such as ChatGPT, Gemini, or Claude.
Yeah. So that does match up then. Yeah.
That makes sense. It is surprising, but it's also not, because I think there was an earlier report that came from, actually there were multiple of them, that points to consumers increasingly relying on either the results from AI overviews or, from ChatGPT or other similar tools to do their research, whether it's buying something, looking for banking products and services. That's actually, Tiffani, remember we heard that from, I don't remember if you were there. Julie, you definitely were, at Finovate Fall on Sunday night before the main conference started. We definitely heard those stats before. So I would think it almost seems like OpenAI is going to be the new Google, where people go to get information.
Yeah, but I mean, even more so.
Sorry, I have a hot take when you're done, Julie.
Okay. No, I was just going to say even more so, as agents are, start working on behalf of, ChatGPT's operator, as they start working on behalf of consumers, that's going to take it to the next level of not just a search engine, but also, allowing it to work on consumers' behalf too.
So
Pam, your hot take.
And I think, yes. And I think we'll touch on some of these topics in a little bit too, but I think the next step for OpenAI is going to be, they will start holding deposits and you can start paying out of the OpenAI wallet directly rather than linking in your bank, and you will hold cash through your ChatGPT account and pay right out of there.
Is it going to be a stable coin though? Is it going to be a stable coin?
Yes.
You got to bring it on chain. Yeah, it's got to be tokenized.
Wow. Okay.
Everything's tokenized.
That's my hot take.
On that note.
Hot take. On that note, it's actually related to the Lyft story. Lyft now has a cash rewards that works similar to Starbucks stored value card, that people can get the rebates from the Lyft ride, and then they can use that rebate for the next Lyft ride. So they keep everything in their ecosystem, and it keeps feeding the beast. Maybe, they'll be competing, Pam.
I actually think a rideshare app will launch a stable coin.
Oh, okay.
I
Why
think they
so,
will.
Tiffany?
Because they have a need to be able to immediately pay people, right? And what faster and cheaper way to pay people than your own stablecoin?
And then that means that we also need better off-ramp for people to change that out to something that they can use.
But if it's in real time, even if you have 32 million stable coins, you can exchange those stable coins to another value in real time. So yeah, I think there will be an interoperability issue if there's too many, but if you really have something in the background that can convert in real time, does it matter as much? I don't know the answer
Someone
to
did
that.
say something similar last week
But
as well.
I will
in
say
Hong
that
Kong
I think
Fintech Week. They
a
say from a
rideshare app
consumer
is going to do
perspective,
stablecoin.
we shouldn't have to worry
Maybe not Lyft,
about
but maybe
all
similar.
of these different variations, right? We need something that just works and everything is abstract from us. So maybe that will be the prediction for 2025, an easier layer for consumers to deal with all of the different kinds of digital assets. Pam, what do you think?
I don't think that's going to be it. I would just kindly disagree that I think it's going to be kept as difficult as possible, because I think that's where the revenue opportunities lie, is charging fees on things and making it as complicated as possible to move money and charge fees on that, because that is where the financial ecosystem makes money. I mean, I feel like, I'm going to go on my soapbox about the Lyft rewards. I think consumers think that they're earning rewards, but I think the companies know that they're just holding working capital, and these are just deposits in disguise that are on like shadow books basically for each of these companies. So like Starbucks, is Starbucks a fintech? Is Starbucks a bank? Is Starbucks a coffee company? I don't know. I think it's a mix of all of those, right? But also, again, to like the ethics and regulatory just perspective of it, like, at what point have we deposited so much money in our Starbucks rewards card that we need consumer protections in case Starbucks loses all our money? Like, there's not the same type of protections that we would have if we had it in a DDA account. So again, like, how are these companies then protecting the cash that is in deposits on their books, essentially? I don't think they are. And I think with a lack of CFPB, we're going to see that become even more just a hardship to people and continue to kind of not be a great experience for us as the consumer, as we have deposits in 30 different accounts. Like, so, we were all talking about financial management and how we track our budgets. Is anybody tracking how much money they have on their Starbucks card as like an asset? I doubt it. Like, when we look at, here's how much money I have in my bank account and here's how much I'm allocating towards this, I've never been like, how much money do I have in Amazon rewards? But like, it's probably a lot of money. But I don't think we see it.
It's how much money do I have? Can I afford a coffee with my balance?
Yeah, exactly.
Or you can do buy now, pay later burrito.
Buy now, pay later Starbucks.
That's 2026.
Starbucks.
Buy now, pay later Starbucks. I mean, as expensive as coffee is going, and potentially pasta too. I read somewhere that we might not be able to see Italian pasta in the U.S. anymore because of the 107% tariff. So buy now, pay later pasta. I mean, it's not that far-fetched when you can do buy now, pay later on a burrito. Anything goes.
I think originally buy now, pay later was shown as like, here's like a financial wellness tool, like if you need like this micro loan essentially, but really it's, again, frictionless spending, but much harder to actually move money that you have. Like, you can spend money like this, but to actually keep your money, we're going to make it as hard as possible. That's my outlook on this whole.
So I have a contrary point to that, Pam, because I just read a couple of days ago, Revolut just launched like a guarantee one-to-one conversion that they're now allowing you to move money between fiat and crypto for free. Now, I don't know if that's going to be industry standard or how the logistics of it all works, because I haven't tried it out. But I would hope that in the future, not the near future, but like my prediction is that the consumers of like 2035 won't necessarily have to know the difference between stable coins and fiat and on-chain and off-chain, because it'll just work so seamlessly in the background. They won't have to think about it. I gave a keynote about this at Finovate Spring, that it'll be just like the analogy that I use. It's like when you take a picture on your iPhone, all you do is just press the white button, right? Like you're not thinking about the f-stop and things like that, like all the things. It just works seamlessly in the background. And I think I'm hoping that with the proper regulatory oversight, it'll work more seamlessly in the background so that consumers won't have to know the intricacies of crypto and decentralized finance, and that it'll work seamlessly on the background so that when they transact, everything will be optimized for them, with their own AI agent working on their behalf. When it comes to like fees and things like that and interest rates, that it'll take it out of the proper account. That's my hope for the future.
So I just want you to know, I want you guys to know that since we've been talking about Starbucks, I'm getting alerts now. So thank you.
Next ChatGPT is going to say, "Hey, Tiffany, do you need some coffee today?"
Yeah.
Actually, I'll have it delivered while we're still doing the recording.
Where's my agent? And I want the agent to answer the door. Bring it upstairs
I think, Julie, on your point, that's like, it's going to be agentic banking. Like the agent will make decisions based off your spending, where you owe money, where you might want to save, and hopefully be able to manage all of that for you. I feel like that would be a great use case of agentic AI in banking, and even in the agentic commerce. Like, here's the bill payments that you're going to need to do. Here's how we can efficiently manage that and make that much easier for you and give you like the best return on your capital that you have. So I would love that.
Yeah. It's like self-driving money, like PFM 3.0, we'll get there. We just have to go through a little bit of pain first.
Yeah.
But even before we get there, though, which reminds me, Nubank has something similar on a different scale for their consumers. So with open banking that they have, which, we are going to get to in 1033 here, Julie, in a minute, they allow consumers who have overdraft situations with other FIs. They send them alerts and say, hey, by the way, we noticed that one of the banks that you have linked to your new bank account is going to overdraft situation. And they will actively work with them to help them reduce the overdraft fees that they have in the other institutions, be it, combining some of their outstanding accounts or balances. And then the other one that they have, which I really, really love, is when they sense that you have idle cash sitting in your new bank account, they would recommend different products that will allow you to move the money there to make money instead of having the cash sitting idle. So it's not really agents in a broader sense, but is them using data and AI to better manage your money instead of letting it just sit there. I love those features. I would love to see that in my bank.
Yeah, we're actually working with a company that does something similar like that in our Alloy Labs concept lab. It's called Cash, in case you want to take a look at it. So consumers can go sign up directly, I'm pretty sure. So it basically does a lot of that of like, here's how you can manage your money in the most efficient way based on your bills and your spending and what your goals are. So I feel like, again, for people like me who are not doing great at that right now, it's something that I think all this technology is really leading towards the betterment of consumers in that sense.
We all need help. So Julie, 1033.
Yeah, so this is something that we mentioned so Finovate just published our 2026 Trends white paper, which you can find in a banner ad on the finovate.com website. But 1033 was obviously a major point in 2025 that nobody was really expecting to take the turn that it did when JP Morgan Chase announced that it was going to start charging fintech aggregators for how they access data. And I think, for a lot of us in the industry, that kind of changed the way we think about fees when it comes to data access. And it also prompted the CFPB, the Consumer Financial Protection Bureau, to rethink Section 1033 and how they're going to mandate access of consumer data. And so that is definitely one trend that we're anticipating for 2026. And there are so many moving pieces. So the comments period just ended last month, less than a month ago. I think they received 1,400 comments. And right now they're in the process of reviewing those 1,400 comments, and they're working on drafting a proposed rule. This all comes obviously at a time when the US government is not in its best form or shape. And so it's really hard to predict what to expect for 2026 when it comes to timing of a new proposed rule and when that'll be drafted and when it'll be live. So it's so hard, when you look at banks and fintechs of what they should expect, it's hard to know what to recommend to them. But just kind of, I've been saying just kind of continue on the path. It's not going away and it'll be up and down, but just kind of continue on the path of where you were pre-July of 2025. I don't know if anybody has any other takes on that.
There were two things that we predicted would happen. Number one, we thought that the regulation would start to be rolled back and that customer protections were going to be in limbo. The other thing that I was hoping, and maybe it was more of a hope than something that was actually going to happen, is that I thought for certain that one top tier bank, meaning over 400 billion in assets, would adopt advanced data sharing controls to lead in personalization. And so to really be able to be the ones to say, like, this is a consumer's data, and we should allow them to be able to decide how and where they want their data shared. But I have yet to see that anyone did that. So apparently I was very wrong.
Does that go into the ethics question, Pam, that you have?
I mean,
let's put that in the ethics bucket.
Yes, I should own my own data. I think it was Andrew Yang who said that we should be paid for the data that is being accessed. Consumers should be paid at a event that I went to recently. So I don't disagree with that. Again, back to the OpenAI, where is all my data going? Who has it? What are they doing with it? Why do I not own it? Why can I not delete it from certain areas? California and New York are pretty advanced in these types of things. So, why is there no national regulations, recommendations? It's all just kind of a free-for-all, which is why I don't really see, to Tiffany's point, I don't see any banks yes, let the customers have their data unless they're going to get something out of it, which I guess in this case would be, JP Morgan Chase charging the fintechs to use the data that is now freely available to send around. So yeah, ethics.
Maybe they'll use that income to decide the personalization tools that they need to create. I'll be hopeful.
Maybe.
To be determined.
And then they'll let you know, based on this is how much tokenized deposits you should get. Oops. Anyway, I got carried away. All right, before we wrap up, one crystal ball prediction for 2026.
I'm going to be very unoriginal and stick with my OpenAI is going to let you hold money in their systems. And
I like that one.
You're going to be able to make payments straight out of OpenAI for your agentic commerce. I think that's
and will it or will it not be a stable coin?
I think there's going to be both options. I think they'll start off with both. I think you'll be able to do cash or buy now, pay later right through OpenAI. That's actually the real prediction.
Okay.
Oh my God, my head hurts. All right, Jill.
These are serious thoughts. I'm not joking.
I'm going to stick with the agentic theme here and go with agentic commerce will replace e-commerce.
2026.
I know it's a little scary, but we can do it.
If all the things that I said are enabled, then yes, that would be totally.
There we go.
Exactly.
Yes.
Okay. All right. Whoa, I'm digesting that one, Julie. That is the boldest one just yet. I think the other two probably have a more highly likelihood of happening. For next year, we'll come back and see how we fare in our predictions. Until then, thank you all for joining in for another episode of One Vision. We'll talk to you next week.